Hey, what's going on, guys? Today we're going to talk about in terms of technical analysis, starting off with what are charts. So let's break down into it. What really are charts? So a price chart is a sequence of prices plotted over a specific time frame, right? So what you are really going to look at in terms of when you talk about technical analysis is you'll be looking at price and in terms of time. Let me explain. Here's a simple chart of, say, Apple. What you see on this side on the chart, the y-axis, right? So there's the x-axis and the y-axis. The y-axis, right? The y and the x-axis. So the y-axis is going to represent the time. Sorry, it represents the price. So this is the price which is representing over here. What you see down here on the x-axis is the time, right? So these are on specific dates. What is the price of the particular stock? So that's pretty much in a nutshell. Now, in terms of to pick a time frame, so when you talk about chart patterns or sort of chart analysis, we want to take a look at in terms of what's the perspective of the particular individual. I mean, looking at the chart, you can take a look at whether there's an intraday chart, a daily chart, a weekly chart, and so on, right? So, for example, this one, the Apple, you see, this is a weekly chart, right? The prices and the time. So this is a weekly chart. The weekly is the suggest over here is a weekly chart. So the weekly chart, you can see the trend is actually up. However, if you were to ask a person who's looking at only a daily chart, you'll say, hey, the price never really went anywhere, right? Anything which is from February till July. So you have to see whenever somebody says, hey, the price is going up, the price is going down, it's going sideways, you have to see relative to what time frame are they talking about. This is a daily time frame, and then you have a weekly time frame. The other thing you want to talk about in terms of time frame is who is going to pick what. Now, if you are a day trader or traders, they usually concentrate in terms of short-term price movements. So when you talk about short-term price movements, you're talking about in terms of really an intraday chart or maybe even a daily chart, right? So the shorter the time frame, the less compressed the data is, and the more detailed that is available. While long on detail, short-term charts can be extremely volatile and contain a lot of noise. Right, so for example, in this one, you see a lot of movement within the chart, but if you look on the longer time frame, since February now, I mean, there's not a lot of price movement. So that's what it really means. If you're an investor, right? If you're an investor, then you are looking like a swing trading. You're looking at probably on a weekly and a monthly time frame. You're looking at a longer term trends, trying to forecast longer term price movements, right? So they're usually for individuals who are looking for swing trading, longer time frame, usually weekly and monthly chart. Traders who are looking at more of a daily or maybe an intraday chart. At times there can be a combination, right? There can be a combination of long-term charts. They're good for analyzing the large picture to get a broad perspective. Then you can try to zoom in on a daily chart and try to find to lower your risk. You can look at the daily chart and see where could be your entry. For example, in this weekly chart, you know the price is trending up. Now you can take a look at the daily chart and see when the market drops, where the price is that price drops to, and it bounces. Right? So there could be a good chance for you to take a daily chart to find entries. The different type charts. One of them is line chart. So some investors, traders, they consider the closing to be the most important, the open, high or low, right? So there's something might open at some particular price. What they consider is the close is really the key, right? So by paying attention to only the close, the intraday swings can be ignored, right? So line charts can also be used when open, high, and low, but mostly they are being used for the closing price, which is the last price of the day. This is a line chart which shows you the the closing price of the particular day. So this is a weekly chart. There's also a bar chart. The bar chart is going to show you the high, low, and close. They're required to form the price plot for a bar chart, right? We're going to look at the bar chart in a bit of a moment. But the high and low are represented by the top and bottom of vertical bar, and the close is a short horizontal line crossing the vertical bar. Right, so something like a bar chart is when you see this red. For example, if you take a look at this red bar itself, this is where the stock opened, right? Then it went up, then it went down, and then it closed up. Right, so overall, since open and close, it was a down move. If you look at something like this, where the price opened, moved slightly a bit down, and then there was a nice close up and closed near the high. So this is a pretty strong move up here, right? Same thing, price goes down, moves up. So this is a bar chart. So this close, you have the open, where the highs and the lows, right? Now next we look at the most popular ones, which is the candlestick chart patterns. Started back in Japan about 300 years ago. Most popular, made by Steve Nissen. So candlestick charts have become more popular, and for the candlestick you need the open, high, low, and close. All are required, just like a bar chart. The only thing is kind of being represented by a candle. So when you talk about a daily candlestick, it's going to tell you what's the open price, the intraday high, low, and close. A weekly, on the other hand, is going to tell you what's the Monday's open in the weekly high-low range and Friday's close. So this is something of a candlestick chart where you will see, for example, you see a white body. So what it really means is that stock opened at this price, then it went down, but the price came back to open, went higher, and then it actually closed under the highs. Right. So this is a regular candlestick. If you look on this one, which is a dark one, the stock actually opened over here, tried to move higher, went down, this was low, and then it closed somewhere down here. Right, so this is the candlestick charts. This is a good identification of candlestick charts again, where the price, let's say same thing, price opens here, goes up, and then closes up here. This doji candle, price opened, goes higher, but actually closed right exactly where it opened. Right. So these are three main type of charts that we look at. With first one, let's break it down again. We're looking at the line charts, where it's only the close. When then we talk of the bar charts, where we're looking at the open, low, high, and close. Same thing on the candlestick chart, but candlestick chart makes lives a lot easier, but just looking at the candles. Any questions, hit me up. If you do like the video, please do like and subscribe. You have a good one.